Look at a company like Ashok Leyland, they think trucks, the economy, growth. And, it seems pretty simple.
Right? When you see that logo, that's what probably comes to mind. But let me ask you, just take a second and maybe even drop it in the comments. What business do you really think Ashok Leyland is in today? I'll give you a moment. Now, many of you who follow the space closely probably know where this is going. But for the rest of us, that simple view doesn't even begin to cover what's really happening.
Because the real story, the one that's going to define this company's future, well, it's not just about big trucks anymore. It's way more complex and, frankly, a whole lot more interesting. To really get it, you have to understand that we're watching two different stories play out at the exact same time. There's a cyclical upturn, and then there's this massive structural shift happening right underneath it. Think of it like this. The cyclical part is like a strong tailwind. The economy's doing well, businesses need to replace their old trucks, so demand is high. That's the easy part to see. But the structural shift, that's like the very ground beneath the industry is changing shape. It's a permanent, fundamental change. And if you're only looking at the tailwind, you're going to completely miss the earthquake. So what is this great disruption? What's this earthquake I'm talking about? Well, it's nothing less than the entire logistics map of India being redrawn right before our eyes. And at the heart of it is this massive project, the Western Dedicated Freight Corridor, or the WDFC. Just picture it, a high-speed railway, over 1,500 kilometers long, built exclusively for moving goods. No passenger trains, just cargo, moving from the north down to the ports, faster and cheaper than ever before. It is an absolute game changer.
And the impact is huge. Suddenly, moving freight by train is about 25% cheaper. Now, if your core business is long-haul trucking, the very heart of a company like Ashok Leyland, what happens? Your biggest competitive advantage takes a major hit. And this isn't just a bad quarter. This is a permanent structural disruption.
So the whole model is evolving. We're moving away from that old system where giant trucks did pretty much everything. The new system is much smarter. It's a hub-and-spoke model. The trains become the backbone, doing the heavy lifting for the long haul. And the trucks, their role becomes absolutely crucial for that final last-mile delivery, getting the goods from the rail hub to the factory or to your doorstep. So, the big question is, what does the company do? Do they fight it? Do they ignore it? No, and this is where the story gets really compelling. Ashok Leyland is actively adapting. They're repositioning the entire business to fit this new reality.
And their strategy is pretty clear. It's a three-pronged approach. One, they're pushing hard into light commercial vehicles, or LCVs, the smaller trucks. Two, they're zeroing in on where the new demand is, urban centers and last-mile delivery. And three, they're building for the future with their electric vehicle arm, Switch Mobility. Why the big focus on these smaller LCVs? Well, this number tells you everything. In developed economies, the demand for LCVs is actually 2.5 to 3 times higher than for heavy trucks. India isn't even close to that ratio yet. That gap represents a massive potential runway for growth, especially with e-commerce and quick delivery just exploding.
Okay, so the strategy sounds smart. But how is it showing up in the numbers today? Let's take a look. But it's really important that we read these numbers correctly. Now, if you just glance at their recent financials, you'll see this, a really nice improvement in margins and profitability. On the surface, you might think, wow, the new strategy is already firing on all cylinders. But here's where we need that crucial context. While the pivot is absolutely happening, a lot of the strength we're seeing in the earnings today is still coming from that strong economic cycle. That tailwind is still doing a lot of the work. The financial results are not yet a full reflection of this new structural strategy. It's coming, but it's not fully there yet. So let's do a quick, unvarnished reality check. Because any business going through this much change is never going to be perfect. We need to look at the strengths, the concerns, and of course, the competition. And this gives us a pretty balanced picture. On the plus side, the balance sheet is definitely getting healthier. The company is in a net cash position, which is great. But on the other side of the ledger, free cash flow has been a bit inconsistent. And that's because they are in a heavy investment phase right now, pouring money into this transformation. It's an improving story, but it's still a work in progress. And we can't look at them in a vacuum. Tata Motors is the clear market leader here, and they're more diversified.
Eicher has a great reputation for efficiency and capital discipline. Ashok Leyland is a very strong number 2, make no mistake. They're improving, but they aren't the industry benchmark yet. And all of this brings us to what I believe is the single most important insight of this entire analysis. It all comes down to understanding the phase a business is in. Because this is the classic trap. So many investors hear the growth story, the EV plans, the big strategy, and they fall in love with the potential of the company. They fall in love with the story, but they forget to soberly assess where the company is right now.
So let's be very clear about what Ashok Leyland is today. It is a cyclical recovery story that is benefiting from a strong economy with some very promising structural improvements emerging underneath the surface. What it is not is a stable, predictable, compounding business. Not yet. The transformation is happening, but it is not complete. And this really is the core lesson here. Investing isn't about some quest to find the perfect company. The real skill is about understanding exactly where a company is in its journey, with all of its current strengths and all of its current challenges. I hope this deep dive helped you understand the real story behind Ashok Leyland a little better. For more insights like this, you can always join our community over on our WhatsApp channel. Thanks so much for watching and stay tuned for the next one. And just as a final reminder, this content is for educational purposes only and shouldn't be taken as investment or tax advice. All market investments are subject to risk, so please be sure to consult.